Hey everybody, so there's a lot of stocks that I like right now, but that doesn't mean I'm buying them right now. And honestly, that's something that I've been thinking about a lot lately. The stock market has been so strong lately. We've seen these huge moves in AI and technology stocks and some companies that are out there that investors love have already these incredible runs that we're seeing. They've made these incredible runs. And when you see a stock continuing to go higher, it keeps going up and up, and you really got to think for yourself, maybe I should, you know, buy this stock, just buy it right away, or even though it's going higher, like just put caution to the wind. And I've definitely had that thought before, and I've had that thought now, but right now, I just have to reconsider that I'm doing something different. I'm waiting. It's not because I think the market is going to crash. It's not because I think stocks are bad investments. It's not because I don't see opportunities out there, but I'm waiting because I just want more selective opportunities out there to put my money. Just not everything. That's what a lot of people got caught up recently, you know, like for example on the AI stocks. So today I want to give 3 reasons why I'm not buying stocks right now, and more importantly, what would actually make me change my mind here. You know, First, number one, some stocks are just too expensive. The first reason is probably the simplest: valuation. I can really like a company easy, and still not like its price. Those are completely different things. And take a company that you believe could grow significantly over the next few 5 to 10 years down the road, and maybe the biggest business is excellent and the revenue is growing, and maybe it's benefiting from artificial intelligence, all the latest technology that's going around with AI. Maybe management is executing extremely well. Sometimes you can tell that you kind of get hoodwinked. Sometimes the management can be doing really bad, and all can be true. You have a great business, revenue is great. AI, they're using AI. Management is executing at full steam there. That's all true. But if investors are already priced in years of incredible growth, the stock can still be a bad investment at the current price. That's something I'm trying to remind myself of, get it in my head. A great company isn't automatically a great investment at any price. You guys gotta realize that too. And that's especially important with some of these AI stocks, especially in technology stocks that have already had these enormous runs. There's so many of them last 6 months. You can list, you know, you know, there's so much FOMO involved with that. When a stock keeps going higher, the temptation is to look at the chart and think, I don't want to miss out. You get FOMO, but I don't want to miss turns into FOMO to be determined. I want to play for an investment. So you're paying for that FOMO, and you lose in the end eventually. I'd rather miss part of a move than to buy something at a price that I'm uncomfortable with, because if I buy a stock today and it falls 20 or 30%, I don't want it to be the first thought to be, I knew I should have bought it at X, but I bought it here. I knew I shouldn't have bought it here. No, I'd rather have been disciplined. I'd rather say it in a disciplined nature. I like the company. I'm just waiting for a better entry price down the road. And sometimes the market eventually gives you that opportunity. And that was reason number one. Reason number two is I'm not chasing stocks. That's the second reason. It's related to the first. Now, I don't want to chase stocks now. This is probably one of the hardest things about investing. You have to find a company you really like. Stock goes up, and then it goes up again, and eventually you start thinking, what if I don't buy it? What if I miss out on this opportunity? It keeps going up without me. Will it go up without me? Um, that's where FOMO comes in. FOMO can be incredibly expensive because when you're buying simply because a stock is going up, you're no longer making a decision based on what the business is worth. You're making a decision based on what you think other investors are going to do next. And those are very different things. Palantir is a good example for me. I like the company. I like AI. I like the opportunity. I like the growth story. But it doesn't mean I'm buying, Palantir here or every time it spikes up. I'm not chasing it like that. That's kind of what dollar cost averaging helps you out. But it doesn't automatically mean I want to buy Palantir at any price. I'd rather wait for a valuation that makes sense to me. Maybe the stock keeps going higher without me. That's okay. I don't need to catch every move. I think there's something investors sometimes miss. They forget. You don't have to buy a stock just because it's going up. You don't have to feel bad that you missed it. There's always going to be another company, another opportunity, another market. Like pointing case, for example, when I was in Tesla, when you're in Tesla, in something like that, Palantir, it could take 10 years to really, 10, 100x to make you that life-changing money, how Tesla was. But if you had Tesla and you only hold it for a few years, you missed a lot of that opportunity for it to really, you maybe made 50,000, whatever, 30,000, but you missed that life-changing opportunity. And that doesn't mean you buy it every chance you get. You just pay. What I'm saying is patience. You got to stick through the ups and the downs. And it's not today to worry about. It's not going to instantly make you money. You got to be patient. That's when the real winners are made in the long term. So that was number 2. Reason number 3, I'm waiting for a better opportunity, better opportunities out there. The third reason is probably the biggest one. I'm waiting for better opportunities. And this doesn't necessarily mean I'm waiting for a market crash. No, it doesn't mean that. I'm not sitting here thinking everything is going to fall 50%. I don't know what's going to happen today. I don't even know what's going to happen tomorrow. I don't have a crystal ball. Nobody does. The market could go higher tomorrow. It could go lower tomorrow. You could trade. It could trade sideways for months. You could get the wrong entry price, this and that. And what I do know is that I don't have to invest every dollar immediately. Put it in cash, do other things with it, pay down debt, just if the opportunity isn't right, save. That's the most important realization, I have to say. You got to get your finances in order before you can buy things. And of course, don't get FOMO, don't chase things. Be in there for the long run. And sometimes having cash available that's a position to have. Cash is a position. If I find a stock I really want to own and the price becomes attractive, I want to have that ability to buy. I want to have the cash there that I can pick up those shares at the cheap. I don't want to have every dollar already invested just because I felt like I needed to be fully invested. Guys, I think this is especially important when it comes to the stock market, when the market feels expensive, especially as well. You just don't need to predict exactly when the market will fail. The market almost will teach you those lessons. So you got to be cautious about that too. You don't want to go to school for the market. You just need to know what you're willing to pay. For example, if a stock I really like falls 15%, falls 20%, falls even 30% because of a broad market sell-off, I I can go ahead and take another look. In case in point, like Palantir when it was dropping. I I wasn't worried about it dropping. I wasn't buying at the highs. I just waited for it to fall, and then I didn't get the perfect bottom, but I got in there at the lows of the time. So maybe nothing has changed about the underlying business. Maybe the market simply became less optimistic. And that can create really great opportunities for you. I'm not going to sit here and say, you know, I know how to predict when a correction is coming. I know when the market's going to rally, this and that. You know, I can't predict that there's going to be another correction coming. I'm just going to be one that is prepared if one does. So you gotta, those are steps 1, 2, and 3. Those are my 3 reasons. And what would make me want to buy? Now I don't want this video to sound like I'm completely sitting here on the sidelines right now. There are stocks I would really consider buying. The difference is that I have a price in mind. I have certain things I want to see from the business. You know, listen to those calls every time they have earnings. I always recommend that. For me, this means things like strong revenue growth, improving profitability, healthy free cash flow, a strong competitive position, and most importantly, valuation. And with all those up, definitely listen to the calls. You know, I did that Tesla, Palantir. Listen to those calls. You can get a lot from those earnings calls. So yeah, again, most importantly, valuation that gives you enough potential upside to justify the risk. If a stock becomes the entire market, it's dropping because of the entire market sell-off, that could create opportunity. You know, that maybe if the market is dropping, but their overall company's still strong, still improving profit, company's still healthy, it's in a strong position. And so if it's the market just dropping just because of something other than the company, it's an opportunity. So like I say, if the company fundamentals improve while the stock price doesn't move at all as well, that could create an opportunity. So if a stock I like simply because it's reasonably valued again, I take another look. That's the difference between waiting and giving up on a stock. I'm not saying I don't like these companies. I'm not saying I don't like the price right now. There's a big difference. You know, there's a difference between investing and gambling. You gotta think long term. So I don't need to find the next 100K stock. It'd be nice, but those are diamonds in the rough. It's not gonna always happen. You know, there can't always be that next Tesla. This is the next Tesla. This and that. Sometime it'll happen. Sometime it won't. Those are rare diamonds. So there's another thing I've been thinking about. I don't need to find the next stock that's gonna 100x. I don't need to do that. I don't need every investment that's going to be a home run. I don't need to own 30 or 40 different stocks just to feel like I'm diversified. In some cases, I do, but it's cases like you have an M1 account, some that splits them up. You're just setting it, forget it. That's nice, but it's not something I check every day. It's just sitting there doing its thing. So I'd rather own a small number of businesses that I understand, I actually believe in. And even with my M1, I look at all those companies that I have that I do own and make sure everyone is a healthy business. I'm not buying just any hype stock, any small stock, or even if it's small, and that Palantir was small at one point, but I'm looking at the business fundamentals. You know, if I can find a handful of great companies and buy them at reasonable prices, hold for them for years, that's enough for me. Especially now at this point in my life. And it can be in your 20s too. You got to think that way too. You just forget about gambling. It's not worth it in the market. Think about investing first for the long run. So that's also why I'm becoming more comfortable waiting here. You know, I have time. If I miss one opportunity, that's okay. If the stock doubles without me, that's okay. I don't want to turn investing into a race just because it turns into a race like that. I don't need to be involved. I don't need to run races because the goal isn't to make the most exciting trade this week. The goal is to build wealth over a long period of time, I'm saying. And sometimes the boring decision is actually a better decision here. And I think I'd rather be boring and make money in the long run, make generational wealth money, than just be a thousandaire and make those quick trades. Trading, you make that money, that's fine, but that's almost gambling in a sense. So I'd rather be long term for the long run. And I think that possibly the biggest lesson here for me. And investing isn't just about knowing what to buy. Sometimes it's knowing when not to buy. Just hold off what you're buying here. And there's a lot of pressure online to always do something. It's everything in life. You gotta be busy doing something, but you don't have to do that in the market. Someone is always talking about the next stock that's going to explode, the next AI, the next 10x opportunity. Woohoo! But the next stock you supposedly can't afford to miss, by the time you look at it and it goes super high, you missed it. So you don't have to participate in every opportunity. You can wait. There's always going to be another opportunity. You know, you can build cash. You can watch a company for 6 months. You can wait for a better valuation. And if a stock never comes down, that's okay. There's always going to be another stock. You know, the sun rises and sets. There's always going to be those opportunities out there. There always will be another opportunity. The market isn't going anywhere. You turn off the lights, go to sleep. The next day, the market's still here. It's not going away. Time goes away, but the market never goes away. It's unless something changes that I don't know. So in conclusion, you know, so there are 3 reasons I'm not buying stocks right now. The number one, some stocks simply are too expensive right now. They're too expensive. Number 2, I don't want to chase stocks just because of FOMO. I've been burned. Even if it's one time you're being burned, which I think it was for me, and that's enough. You lose like $3,000 on the stupid chasing some FOMO. You think it's the next AI. That doesn't have the numbers behind it, and then you get caught up in some hype. We've all made those mistakes. And number 3, I'm waiting for better opportunities. Those long-term wins have been the best for me. Just picking, researching, finding the right opportunity, right timing, and then buy, and then stick to it. And find those companies that are repeatedly making money, and they're just stacking, you know, rule of 40. They're breaking all those records there. So I'm waiting for better opportunities. It doesn't mean I'm bearish. I don't think the market is going to crash. It doesn't mean that I'm done investing. Just pausing here. I'm just trying to become a more patient investor, watching things more. And I think I just learned that with Palantir and a few others, even NVIDIA. Because I think one of the biggest mistakes you can make is to feel like you have to buy something just because the market is moving. Sometimes the best decision is to do nothing, and when the right opportunity eventually comes along, you want to have that cash and conviction to take advantage of it. So I'm curious, if you made it this far, I'd like to know, are you buying stocks right now? Are you waiting for a better price? Let me know in the comments below. I'd like to know your feedback on that, and thanks for watching Stock Likes. If you enjoyed this video, hit the like button, hit that subscribe, and more people on board, the better. If you like the stock market and investing, and I'll see you guys on the next one. And as always, this video is for information, educational purposes only. It's not financial advice. And always do your own research before making these investment decisions. And we're all going to do well here. Maybe if it's just taking a pause and, changing up your life a little bit, paying off debt, building cash, instead of being market, gotta buy this stock, gotta buy that stock. And that's what gamblers are for, and we're investors here, so let's keep it that way.